Hey everyone, welcome back to Corporate Decoder, the place where we take the most boring corporate documents and find the juicy bits. Today we are diving into the 11K filing for the First Fed Bank 401K plan. And let me tell you, this one has some interesting things to say about your retirement savings. So what exactly is an 11K filing? In simple terms, it is an annual report for employee benefit plans. Think of it as a checkup on your retirement money to make sure everything is in order. This report covers the plan for the fiscal year ending the 30th of June 2025, and it gives us a peek into how your retirement funds are being managed. One of the key things we look for in these reports are the financial statements. These statements show us the overall financial health of the plan. As of the 30th of June 2025, the plan had a total of over $20 million in net assets available for benefits. That might sound like a lot, but it's important to see how that compares to the previous year. And guess what? It grew compared to the 30th of June 24, where they had about $18.5 million. So that is a healthy increase of around $2 million. This means the plan as a whole is growing, which is generally good news for participants. Now let's break down where that money is. A significant portion of the plan's assets are invested in what are called registered investment companies, and then there is also common stock. We see, for example, that the insurance company contract, which is reported at contract value, which is essentially what the plan can get out of it, is valued at about $505,000 in 2025, down from about $626,000 in 2024. This decrease might be something to watch, but it is a relatively small part of the overall pie. Here is something interesting. The plan also has notes receivable from participants. Basically, this means people in the plan have borrowed money from their own retirement accounts. In 2025, these outstanding loans totaled about $345,000, a slight decrease from $350,000 in 2024. While it is common for retirement plans to allow participant loans, it is always a good idea to be cautious about borrowing from your future self. So where did all that growth come from? Let's look at the statement of changes in net assets available for benefits for the year ended the 30th of June 2025. This is where we see the inflows and outflows. The plan saw significant additions through investment income. We're talking about over $2 million in net appreciation in the fair value of investments. That is essentially the growth in the value of the stocks and funds within the plan. On top of that, there were dividends and interest adding more. But the biggest contributors to the plan's growth are always the contributions. In 2025, participants contributed a whopping $1.8 million. The employer, the First Fed Bank, kicked in over $500,000, and rollovers from other plans brought in another $1.3 million. All those contributions combined with investment gains really boosted that net asset number. Of course, there are deductions too. The biggest chunk goes to benefits paid to participants, totaling over $4 million in 2025. There were also administrative expenses, which came in at around $95,000. The net effect of all these additions and deductions resulted in a healthy increase in net assets available for benefits of over $2 million for the year. Now let's talk about who is managing this money and what they are investing in. The report details the investments held by the plan. We see a substantial amount invested in registered investment companies. For instance, the insurance company contract with Principal Life Insurance Company is a significant holding. The plan has notes receivable from participants, which are essentially loans to employees secured by their account balances. These loans have varying interest rates and maturity dates, extending as far as April 2041. A notable investment is in First Northwest Bancorp stock itself. This is where participants are essentially invested in the company that sponsors the plan. This is a common practice in 401 plans where company stock is offered as an investment option. At the 30th of June 2025, the plan held over 33,000 shares valued at over $260,000. The plan also offers a diverse range of investment options from major fund providers like Vanguard Group, Principal Funds Incorporated, PIMCO Funds, and Columbia Funds. This diversification is crucial for managing risk. We see funds like the Vanguard 500 Index Admiral Fund, Vanguard Growth Index Fund, and various target retirement funds. These target date funds are designed to automatically adjust their asset allocation as retirement approaches, which is a popular feature for many plan participants. The report also details how these investments are valued using the fair value hierarchy. For the 30th of June 2025, all registered investment companies and common stock investments were valued using level 1 inputs. This means they are valued based on unadjusted quoted prices in active markets for identical assets. This is generally considered the most reliable form of valuation. There were no level 2 or level 3 investments reported at this date, which suggests a high degree of liquidity and transparency in the plan's holdings. Digging into the plan's description, we learn that it covers substantially all employees of First Fed Bank and is subject to ERISA. The plan was renamed from First Federal Savings and Loan Association of Port Angeles 401k Plan to align with the company name. Employees are automatically enrolled in the plan upon hire if they meet the age requirement of 18. They start at a 3% contribution with automatic annual increases of 1% up to 6%. The company matches 50% of employee contributions up to 6% of eligible compensation. This matching contribution is a key benefit for participants helping to boost retirement savings. It is important to maximize these matches if you can, as it is essentially free money for your retirement. Vesting refers to your right to keep the employer's contributions. Participants are immediately vested in their own contributions. For the company's contributions, vesting happens at 25% per year after 1 full year of service, with full vesting after 4 years. This is a standard vesting schedule, and it means employees need to stay with the company for a certain period to fully own the employer's contributions. The plan has a group annuity contract with Principal Life Insurance Company. This contract is described as fully benefit responsive, which means it is designed to pay out benefits based on the contract value. The contract guarantees a certain interest rate which can be adjusted every 6 months within a specific range. The plan's ability to get its money out is dependent on the insurance company's financial health. The report assures that no events are probable that would limit the plan's ability to transact at contract value with the issuer or participants. This section highlights transactions involving parties that have a relationship with the plan. As mentioned, investments include First Northwest Bancorp common stock. Also, transactions with Principal Trust Company, where they act as trustee, are considered party in interest transactions. The report mentions indirect fees paid by the plan for investment management services to Principal Trust Company were about $23,000 for the year ended the 30th of June 2025. Now, for my take on this filing, the First Fed Bank 401k plan appears to be well managed. The growth in net assets available for benefits is a positive sign reflecting strong contributions and solid investment performance. The diversification across various fund providers and investment types is a good strategy to mitigate risk. The fact that significant assets are in level 1 investments is also reassuring, pointing to clear and readily available market prices. One area that always warrants a closer look is participant loans. While they offer liquidity to participants, they do reduce the amount of money that can grow over the long term. The nearly $350,000 in outstanding participant loans, even with relatively low interest rates, means that money is not fully compounding for retirement. It is a trade-off to consider. Overall, the direction of the plan seems stable. The company is actively contributing, and participants are taking advantage of the benefit. The risks mentioned are pretty standard for any investment plan, market volatility being the main one. However, the plan's structure with a variety of investment options and a commitment to ERISA compliance suggests a solid foundation for participants' retirement savings. It is a good sign that the plan is transparent and provides this level of detail in its annual reporting. Alright, that is our breakdown of the First Fed Bank 401 plan's latest filing. What is your take on these numbers and what they signal for the company's retirement benefits? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more corporate deep dives. Don't forget to check out the Discord community linked in the description below for more discussions. Thanks for watching. See you next time.